In a world of ever-shifting economic landscapes, two significant developments have captured global attention. In the United States, Federal Reserve Chair Jerome Powell's stance appears to be evolving as he leans towards a more dovish approach, signaling potential rate cuts amid current economic conditions. This marks a notable shift from his historically hawkish position, demonstrating his flexibility and leadership in navigating monetary policy. Meanwhile, across the globe, China's central bank has made a surprising move by cutting its lending rates in an attempt to stimulate its slowing economy. This action highlights the ongoing struggles within China's economic environment, characterized by a real estate slump, weak consumer spending, and persistent trade tensions. As we witness these pivotal changes in economic policies, we must ponder the broader implications. How will these moves shape the future of global economies, and what ripple effects might they have on our everyday lives? U.S. Economy News Today. Fed Chair Jerome Powell's new dovish stance and China's surprising rate cuts. Today, the global economic community is abuzz with two significant developments: Federal Reserve Chair Jerome Powell's unexpected dovish shift and China's central bank's surprising decision to cut lending rates. These moves, occurring on different continents, underscore the dynamic and interdependent nature of the global economy. Powell's dovish turn, a strategic shift. Federal Reserve Chair Jerome Powell, traditionally known for his hawkish stance on interest rates, appears to be adopting a more dovish approach. According to a recent review by Deutsche Bank, Powell, who has historically advocated for higher interest rates, is now at the forefront of discussions about lowering rates more aggressively than some of his Federal Reserve colleagues might prefer. Powell's previous push for higher rates occurred in a pre-pandemic environment characterized by robust economic growth. The analysis suggests that his current shift is a reflection of his ability to adapt and lead in response to evolving economic conditions. The review emphasizes that Powell's flexibility being more aggressive during a hiking cycle and more accommodative when preparing to cut rates demonstrates his commitment to steering the Federal Reserve in the right direction amid changing economic landscapes. This shift towards a dovish stance comes at a critical time, as the U.S. economy grapples with post-pandemic recovery challenges. Powell's leadership in this context could be pivotal in shaping the Federal Reserve's policies to support sustainable economic growth and stability. China's bold move, cutting lending rates. In a surprising turn of events, China's central bank announced a cut in its benchmark lending rates, aiming to invigorate an economy facing significant headwinds. The People's Bank of China reduced a short-term policy rate, followed by Chinese banks lowering their benchmark lending rate for mortgages and most other loans by 10 basis points. This move, unexpected by many analysts, reflects China's urgent need to address a sharp economic slowdown. China's economic challenges are multifaceted. A prolonged real estate slump has significantly impacted the market, and tepid consumer spending coupled with ongoing trade tensions has further strained economic growth. The rate cuts are seen as an attempt to mitigate these issues and stimulate economic activity. China's central bank is the latest to join the global trend of interest rate cuts aimed at combating inflation. Following similar actions by the Bank of Canada and the European Central Bank, China's move underscores the interconnectedness of global economic policies. However, unlike its counterparts, the Federal Reserve is anticipated to maintain its interest rates steady in its upcoming meeting. Global economic implication. The developments in the U.S. and China have far-reaching implications for the global economy. Powell's dovish turn suggests a potential shift in the Federal Reserve's approach to monetary policy, which could influence global financial markets and economic strategies. On the other hand, China's rate cuts highlight the challenges faced by one of the world's largest economies and the measures being taken to spur growth. These actions reflect a broader trend of central banks worldwide navigating complex economic conditions with varying strategy. As countries grapple with post-pandemic recovery, inflation, and geopolitical tensions, the decisions made by economic leaders like Powell and the People's Bank of China will play crucial roles in shaping the future of global economic stability. Looking ahead, navigating economic uncertainty. As we look to the future, the evolving economic policies in the U.S. and China prompt critical questions about the direction of global economies. Will Powell's dovish stance lead to more aggressive rate cuts in the U.S. And how will this impact inflation and economic growth? Can China's rate cuts effectively revive its slowing economy? And what are the potential risks involved? These developments remind us of the intricate balance that central banks must maintain in their pursuit of economic stability. The interplay between different economic policies and their global repercussions is a testament to the complex and interconnected nature of today's world economy. In conclusion, the shifts in economic strategies by key global players underscore the importance of adaptive and forward-thinking leadership. As we witness these changes unfold, it's crucial to stay informed and engaged with the ongoing developments. How do you think these economic moves will influence global markets and our daily lives? Share your thoughts and join the conversation on the future of our economies.